CBOE is the youngest exchange in Chicago, just had its 40th anniversary, and it was a child of the Board of Trade. And it was a child of the Board of Trade because about 45 years ago, the Board of Trade recognized that it needed product diversification. It relied solely on agricultural commodities, and particularly the grain products, and it was a very volatile kind of business. If there was a drought in the Midwest, prices would go up, and if there wasn't a drought, prices would go down. And they wanted to trade something that related to the stock market, and they really wanted to trade futures on stocks. But when the SEC got wind of that, they go, oh, no, you don't, because there wasn't a CFTC at the time. So they said, if you want to trade anything related to the securities markets, we'll let you trade options on stocks, puts and calls that have been traded for hundreds of years, but never regulated, never traded on an exchange. And the very bright people from the Board of Trade figured out a way to standardize the trading of options, which was much more complicated than futures. And they did that after 5 years of work and launched the CBOE in April of 1973, trading options on 16 companies, calls only, but then it created the first index option. It created what's called LEAPs, or long-term equity options. It then created what's called flex options, which is to modify the terms of options, very important for institutional investors, and on and on. But one of the challenges the CBOE had, it was tethered to the Board of Trade. It was tethered to the Board of Trade because 35 years ago, 40 years ago, when the Board of Trade created the CBOE, there was no concept of equity in exchanges. So the Board of Trade membership said, how do we monetize this investment we're making in this thing that we're not even sure will ever work? So the Board of Trade members, not the exchange itself, were granted what was known as an exercise right. They could actually become a member of the CBOE if they chose to, based on their membership at the Board of Trade. And for many years, the Board of Trade members would leave the Board of Trade floor and they'd come over to the CBOE and trade. If things got slow on the future side, they'd come and trade options. And later on, they were leasing their memberships. And it was a relationship that wasn't always perfect, but it worked. But I will tell you that it was a very arduous task for CBOE to free itself from the Board of Trade. And when we did that just over 3 years ago, we were able then to have our own IPO. And CBOE became a public company, independent of the Board of Trade, just over 3 years ago. And we are the only really independent standalone options exchange in the United States. And it's primarily, if not exclusively, based on innovation to create new products and to successfully launch them. So one of the things that we excel in now is having options on S&P indexes, which we've had for years and years, which grows very, very much. And the other is that we've been able to create volatility options, volatility futures, and volatility products on a whole variety of other indexes. And I want to talk about options as securities, not futures. So first of all, my thesis to you is that during the course of what you're studying, whether it's here in this class or at the work you're doing in these internship programs, it's important for you to understand about options because there's a tremendous emphasis on futures trading and futures options possibly, but the securities options business is a very large growing business, and it's different than the futures business because we're under a different regulatory scheme. So the SEC regulates all the securities option markets in the United States. The CFTC regulates futures exchanges, which include futures options. There are many, many more securities accounts, and there are many, many more securities options accounts than in the futures industry. It's a different product for different customers. It doesn't mean that certain people can use both. Option customers fall into two groups, those that do it themselves and those that do it with brokers. So if you take the Schwabs, Fidelities, Ameritrades, these are people who will be what I call self-starters. They are people who understand the stock market and use options to either augment their portfolio or in lieu of stocks. And it's a very large group. These are the most sought-after customers in the securities business. So we work with the firms to help them educate their customers because option customers have to be approved based on the type of strategies they use. We have in the option business what's called dedicated market makers. Unlike a futures contract, which basically you buy it or you sell it, or you short it, options, say on IBM or Google or GE or Microsoft or pick your stock, can have hundreds and hundreds of what we call series. A call on Google at $700 a share for March delivery or March expiration is a series of Google options. There could be 300 Google options. How do you have liquidity so when a customer wants to buy or sell an option, there's someone on the other side? Because there's not always a customer order on the other side. So we have in our business dedicated market makers. And one of the exciting things about Chicago is many of the firms that are the market makers are based right within a few blocks of this building. They're called proprietary trading firms, and they are registered market makers. And they use a lot of mathematical models. They are very risk-oriented, and they do a terrific job in making liquidity in the option markets. The next category would be professional investors like hedge funds who use the option markets in many, many different ways. And the last category, and the category that I think is growing the fastest, is institutional investors using options. I'm talking about pension funds, endowments, and large institutional investors who, particularly in the period of time we've gone through lately, have needed to use options to augment the lack of income they've gotten from their bond portfolios. So options can provide incremental income to a portfolio, and they can also reduce the volatility of their portfolio. So institutional investors, in my view, are a very important growing part of our business. And all this works together because the amount of liquidity in the option business has grown dramatically. The other part of the business that I think is very important is the issue of product innovation. You are in the heart of the most innovative options and futures markets in the world, which is Chicago. Most of the innovation that's come out of this industry since exchanges got into financial products in particular have come out of Chicago. And there are three ways that I think innovation has worked in this city. One is that you need to determine what products have economic value, and then you have to design a contract. You first need to have something which has an economic necessity, and then you have to develop the contract specs. And how do you do that? What we do is we draw on 3 or 4 major sources. We draw on the internal research staffs of the exchange. We draw on the traders at the exchange. We draw on the academic community, and we also go to the trading firms, whether it's on Wall Street or in Chicago. And we get them all together because everyone comes at it differently. That's one major component. Second major component is liquidity. You can have the best contract design in the world. If you don't have liquidity, you're not going to have anything because people will not trade it if there's no liquidity. How do you do that? One of the ways we do it is, again, to use the local firms, the market-making firms, to incent them to help provide two-sided markets, particularly in the early days. And the last is you need education. And education is a continuous process, and you do it at all levels. You do it at the retail level, you do it at the institutional level, you do it among the trading community, so that all these things have to come together. That's kind of the secret sauce that makes these Chicago markets work so well. And it's also the willingness to take the risk that you're going to try something that might not work. But if I have 2 things I leave you with today, is one, you better learn about options. If you think that you can come to Chicago and learn about futures and not about options, you're missing something very, very important and very fundamental. And the second thing is the most exciting thing to come out of the Chicago markets in 20 years, maybe more, is volatility products. So we are constantly innovating. I am as enthusiastic or more enthusiastic about our option business than I've ever been because we keep reaching a broader and broader audience. The government of China just approved the trading of options in China for the first time. They've only been able to trade futures. So the potential growth of our business is tremendous because, in my view, the product has such flexibility and such versatility. So that's why I urge you to learn about options, whether it's here, whether it's on our website, or any other way that you choose to do it, because it's so fundamental to the whole risk management process.